Good afternoon and welcome to Biztech's Asian Midday Market Watch, brought to you by the ShareInvestor Group, providing stock market data analytics, investor education, and online investor relations. It's Friday and we have Charu Chanana, market strategist from Saxo Markets Singapore. Charu, good afternoon and great to have you on the show.
Thank you, Brian. It's a pleasure.
Now, Charu, before we get your insights, we're going to take a quick look at crypto markets, how they're performing, and also how regional stock markets have performed. Now, we've got Bitcoin at 22,805, down 2.68%. Ethereum is at 1,820.46. It's down 1.5%. Now, looking across the regional stock markets, the Straits Times Index out of Singapore is down 0.75%. The KLCI is down 0.19%. Shanghai is up 0.04%. The ASX All Ordinary is down 0.01%. The Nikkei is down 0.03%. The Hang Seng is up 0.43%. And rounding up the numbers, we've got the Kospi, which is down 0.44%. Now, Charu, what's your view on how markets have performed in the first half of the day?
So, of course, we're getting pretty mixed signals from the US. And of course, these are July and August are low liquidity months as well. So I think there's certainly a lack of direction in the markets right now, where we are waiting for the next big event. So I think I wouldn't read too much into a daily market move for these days, at least.
Now, so Charu, I want to ask you then, let's take a look at how US earnings have fared so far. What are your thoughts in this area?
So, if you look at the headline, of course, Q2 earnings in the US have been stellar. We've had 8% EPS growth if we look at about the 95% of S&P companies that have already reported results. So that's really good, coming from a point where we initially thought that Q2 will be a tough earnings season. But if you really dig into the details, you will find, Brian, that it's a very skewed kind of an earnings season. Two reasons that I would like to highlight, which really concern me, are that earnings have been mostly driven by energy companies. So energy companies have reported a 300% EPS growth, in contrast to the tech sector, which is up about 1% in EPS terms. So that's the kind of divergence we have. And of course, we have financials, which are down 22%. So there's a heavy divergence there. And I wouldn't really go and say that it's been, an all-round wonderful earnings season. And secondly, the outlook is still quite dire. I mean, we do see the supply issues getting a bit better, but the demand side is also getting weaker at the same time. So yeah, a lot of pressure is still to come.
Okay, then if I'm an investor, and obviously there is a wave in terms of energy stocks, how do we ride that wave?
So I think we have to be very broad-minded if we want to ride that energy wave, because we certainly are getting into an energy crisis. You see Europe gas prices about 9 times what they've paid in the last 10 years or so. And, even Asia is getting into it now. By the winter, I think Japan and South Korea will also start to see, gas shortages, LNG shortages. So at this time, a lot of countries are, of course, moving to the traditional sources, fossil fuels, coal. Unfortunately, we have to go back to it because that's the one that can meet energy demands of the world. So I think it's important to understand that there's not going to be one or the other energy. It's going to be energy diversification for the years to come. So you have to have a balanced view. And so your investments have to have a balanced view as well in terms of renewable and non-renewable sources of energy. So, I would say look into some broad energy sector ETFs. That would be a good strategy.
Okay. And then I want to go back to the US again. There are real signs of pain in the housing markets, and this is just early days. Walk us through some of the issues there.
Yes. I think that's one of the red flags that I really see in the US economy right now. Nothing like a major housing crisis is coming or something, but it's certainly something that could drag the GDP. It could drag the employment numbers in the days to come. And the problem is not so much on the demand side, I would say. Demand is slowing down. We have higher mortgage rates and, inflation is obviously biting the consumers. But at the same time, I think it's just really about normalization in demand from the very high pandemic era, demand levels that we've seen earlier. So the bigger problem for me really is on the inventory side. Where of course construction boom during the pandemic has had these home builders have a huge pile of inventories now. So that continues to be a concern, and because of that, I think construction activity might as well slow down in the months to come. Which, like I said, it can weigh on GDP growth. It can weigh on, the construction employment part of the jobs numbers that we see. But we do have offsetting factors as well. I mean, the consumer balance sheets are still quite strong. Corporate balance sheets are still quite strong. So I think overall, the GDP growth trends will still be maintained in the US. But this is, one sector I think we should continue to watch.
Now, Charu, moving on to Japan and closer to home, Japanese inflation is a point that we need to discuss, and also its brewing energy crisis. Walk us through some of the issues over there.
Yeah, I think briefly mentioned that before, Brian. So we had the Japan nationwide CPI report this morning, and inflation continues to be above the Bank of Japan's 2% target, much above now. We have headline at 2.6 and core at 2.4 as well. So while that is not really going to, prompt the BOJ to stop its dovish policy or to alter its dovish policy right now, I think we need to watch for how inflation pans out in the winter months, like I mentioned earlier. So Japan is one of the biggest importers of LNG in Asia, along with other countries like China and South Korea. Now, because of this energy crisis in Europe, a lot of the LNG cargoes are actually getting diverted to Europe rather than Asia. So Europe and Asia are fighting for gas, really. And it's going to intensify into the winter, mind you, because Europe's threats are only going to get bigger there. So with that, of course, Japan needs to pay a much higher price, something comparable to what Europe is paying, to be able to secure its energy supplies. And we have a weaker yen, which is obviously weighing on Japan's imports as well. So that can continue to push inflation higher into the winter months in Japan. And what that means is that, of course, on the domestic economy side, they will also have to consider nuclear. They will also have to consider probably coal to meet their energy needs. But at the same time, with inflation going higher and higher, it does mean that, Bank of Japan has to continue to be very cautious, because it is really, quite committed to its accommodative policy right now. I'm not sure how long that can continue, in contrast to the global tightening wave.
Now, Charu, as always, thank you very much for your insights, and thanks for coming on the show.
It was such a pleasure. Thanks, Brian.
Now, we've been speaking to Charu Chanana, the market strategist from Saxo Markets Singapore, on Biztech's Asian Midday Market Watch. Now, specifically for our audience in Singapore, Invest Fair by ShareInvestor is happening physically at Suntec Convention Hall 404 on Saturday, August 27th from 9 a.m. onwards. Now, it's free to attend and features power-packed investment analysts talking to the visitors on how to deploy your capital. Now, sign up today at investfair2022.com and see you there next Saturday. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our syndication partners, TV, radio stations, and websites. Please like and subscribe to our various platforms. Thanks a lot for tuning in.